Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, it's time for an update for YouTube and it's going to be Bitcoin again. And I'm feeling pretty satisfied with what's going on at the moment, but don't worry, I'll get into the gloating in more detail in a little while. Now before I begin, however, I just want to clarify something. If you're wondering why you're not seeing many videos on YouTube, I've explained before, life circumstances, time limitations. I simply don't have the time to put into it at the minute. What time I do have is going into servicing my Patreon members. I'm putting out regular updates now, short format videos on Bitcoin, other cryptos, the S&P, the Nasdaq, S&P 500 sectors. I'm doing a series of videos on those at the moment. I've still got all of the Green Star Education channel teaching you how to learn Elliott theory and teaching trading methodology. And I've still got a very busy Discord with many people discussing lots of ideas, and I'm keeping the Tom's Charts channel up to date as well. So what I'm trying to say is, if you want access to anything other than this occasional YouTube video, you want access to my analysis and a community which can help you, then signing up to Patreon is the way to get it. The day will come when I have more time to put back into YouTube when my life circumstances change, but for the moment that is not an option, so I'm focusing on satisfying my paying customers. So if you want to access that education, you want to access that analysis, you want to access all that extra content and videos plus that Discord community, then follow the link in the description below and sign up to the Patreon today. Okay, next item, there is someone going around on Discord impersonating me. Very similar tag to my own. My tag is Green Star Tom. Their tag is Green Star Tom. In other words, there's an extra R in star. They are being very chummy, sending people personal messages, trying to extract information, trying to extract data. For Pete's sake, don't give them anything. I will never solicit you. I will never contact you personally. I will never ask you for any personal details. And I certainly won't be talking to anyone personally in the Discord who isn't a paying patron, who isn't signed up to my own Discord. So just be aware out there, guys. Green Star Tom using the same symbol, using the same image. If you come across him, report him. We've all got to do the same against these scammers to try and fight them. Unfortunately, I'm not the only one who's suffering this at the moment. There are a few other Elliotticians and technical analysis individuals at the moment who are being impersonated, a couple of which have even had to go so far as to close down their Discord communities, which is quite sad. So just be aware, don't get scammed, keep an eye out. Okay, so now let's actually look at Bitcoin. And you're going to have to put up with me gloating for at least a few minutes. I think I've earned the right to do it. I've been bullish for a long time. If you go back on my YouTube channel to December 2022, you will find a video called Bitcoin, Is This the Bottom? And that was when I suggested that given the shift we'd seen in the MACD, given the scale of the decline and its length and duration, I was of the opinion that we had bottomed and insisted that my primary count from that point would be bullish, and I would be observing any move up as more probably the beginning of a new bull market. This is what has come to pass. So I would like to take some credit for that and a bit of a victory lap, because it's been a tough old bear market and a tough old bull market for some of us bulls, because in my opinion, and I don't think I'm the only one who's experienced this, this has been one of the most hated rallies I've ever witnessed in any asset class ever. There's just been so much disbelief. And I have to be honest, the whole time that disbelief's been there, it's filled me with more and more confidence that I'm right. Now, I'll stop gloating now, because I know it's not becoming of a gentleman. But still, we are where we are. We are up off of the lows. We are up over 300%. You want to be bearish after a 300% gain? Be my guest. I'll take that as a pretty bullish sign, along with everything else I've been presenting over the last 18 months. Now, let's get back to it. We're going to turn off the primary count for a moment, and we're going to look at the market cycles and the crypto seasons. So, if you're new to the channel and this is the first video you're seeing, first bit of Bitcoin analysis you're taking in, here's the 4-year cycle presented from bottom to bottom. Now, it doesn't have to be bottom to bottom. You can do it top to top. You can do it bottom to top. You can project this forward any way you want. But I think predicting where the bottoms are going to be is where the value of any asset is. Alright, now this is just a time cycle. Cycles are made to be broken. It doesn't have to play out again. It could, but it doesn't have to. So what we see, if we, excuse the cough, if we bring up our correction lengths and correction depths, right? Let's go correction depths first. So our first big crypto winter, which is the 13 to 15 bear market, which is when I discovered crypto. Yes, I was quite a late adopter next to some of the, considering that I've been trading for much longer, I was quite a late adopter of crypto in regards to some of the voices I should have been listening to 3, 4, 5, even 6 years earlier. But regardless, we all learn 86% decline, right? Big bullish run into the next decline of 84%. Big bullish run into the next decline of 77%, which was the last bear market. As you can see, 77, 84, 86. The severity of the declines is reducing over time. Now let's have a look at the correction lengths, because this is interesting in predicting future events. 413 days, 364 days, 378 days. These two are roughly equivalent. This one's slightly longer. Now, it could get longer again if the main count of 1, 2, 1, 2, 1, 2, 1, 2 into that 3, 4s, things may get stretched out more, but they may become more brief. Wave 4s at smaller degrees in crypto are very brief. Is that going to be true at the grander degrees and the larger degrees as we push on? Honestly, I have no idea. So we'll wait and see, because this asset is just so volatile and makes such huge strides so quickly, it's very difficult to say. But what we can say is that a winter is roughly a year long, roughly. 378, 364, 413. So what we can do is take the 4-year projection from bottom to bottom to bottom to bottom, and we get a date of the 2nd of November 2026. So if we take a year off of that, 364, that gives us a date of approximately the 3rd of November 25. We've got until November 2025 until the market peaks and the winter begins. Okay, I find that very reassuring, and this is why I've labelled it summer, that we've got a nice long summer and autumn to come before we get into that next winter. So don't fret, don't panic, don't feel like you've missed the bus. We've still got 18 months minimum if things play out as before. Now, I'm not saying they will, they don't have to. But if they play out as before, we've still got 18 months of gains ahead of us. We haven't even had Retail Jack and all his mates show up yet. So we've got a lot of craziness to come. Now, on that note, managing expectations, managing risk, and managing our emotions and our psychology, I'm a boring bastard when it comes to crypto, and especially Bitcoin. Now, anyone who's joined the Patreon knows that I teach. I've got a video on psychology, got a video on risk management, I've got a video on the trading techniques and methods using Elliott Wave and using my own standard trade setup, and I do say and prove that it can be applied on any time frame. But for me, I'm not a day trader. I'm a swing trader at best in equities and commodities, and I'm a long-term hodler in Bitcoin, because it's just so much easier to do. It's just less stressful. You have a big decline, you buy more. You have a big decline, you buy more. You have a big decline, you buy more. You've got the hymn sheet in front of you, just follow it. Right? I'm not interested in trying to get into a parabolic move. I'm not interested in trying to time a fallback in the parabolic move. I want to buy near the lows so I don't have that stress. Right? And there will be future opportunities. There will be a group of people we will be talking to in 18 months' time who are euphoric, who are over the moon with what they've made in the last few months of this market, where most of the gains come. And they will be screaming that they're geniuses because they're human and we're human and we've all done it. But we know what's coming. We know winter's coming. Right? Because the Starks are always right in the end. Winter's coming, and then we will know, for those who are new, who will go through that for the first time, they will have their first opportunity to buy at the bottom of winter. Now, will they do it? Even with the likes of me and you and us who've been through this a few times now, we'll be screaming at them to do it. They may ignore us. But Some of them will do it, and they will be the big gainers in the next cycle, and this will go on and on and on for years, decades, who knows how long. So there's your little lecture. We're in summer and things are groovy, and we've got until November 25 until we peak out. Probably could be early, could be later, who knows. So now let's come off of the crypto market cycles and seasons, and let's have a look at our actual count. So primary count, as I've been suggesting this whole time, super cycle 1 into 2, cycle 1 into 2, primary 1 into 2. Are we in intermediate 1 into 2, or have we already had intermediate 1 into 2? This could have been intermediate 1 into 2. Given the duration, the amount of time off of the low and back, and to come back to these highs to test them before breaking through them, it's similar in duration to this period during the COVID collapse. However, it's not as severe, nowhere near as severe. So there's an argument to suggest that if things are scaling up again, this may all be 5 waves up to new highs, and then a big pullback for intermediate 2, and then into intermediate 3, of primary 3, of cycle 3, of super cycle 3, is some serious fucking fireworks. Pardon my language, but I'm tempted to say intermediate 1, 2 is already in, just because I want to rein in my obscene level of bullishness. But if intermediate 2 isn't in, it's a godsend. I mean that like you can't believe. It's a godsend. If we get 1 and 2, 3 and 4 and 5 into 1 at new time highs, then we get a pullback of 50, 60, 70% before we go for hundreds and hundreds of percent higher. Not only do you get a chance to rebuy it lower again, but those people who've missed the opportunity off of that initial move off the low, they get their chance as well. Is it going to happen? It sounds too good to be true, in my opinion. As a trader, those kind of opportunities are, the kind of things you dream about, and we mustn't expect our dreams to come true. So it's probably more likely that we've already had our 1 and our 2. Okay, and maybe we're working on the minute degree, and this could all be minuet degree. Maybe we've got our minute degree. Okay, so it could be intermediate 1 and 2 already. Maybe this is minor, maybe minor's not in, and we get a small, a significant pullback, but not a massive one, and then we're off into 3 of 3 of 3, and we just keep going. Right. So yes, I'm bullish, hoping we do get. Keep my fingers crossed that we do get that bigger pullback, because who doesn't want the opportunity to buy more, especially in an established bull market. But there you go. So that's the bullish count. We'll come in and have a look at smaller time frame detail in a minute. All this stuff over here. But this is the large time frame. Bearish count. I've adjusted this to accommodate a flat pattern. Calling this W and X once we've already come back more than 90%. The move down from the highs to the lows, the bear market, we've retraced more than 90% of it in log and linear. Right? So we're basically at the highs. So to insist that this is some kind of steep zigzag pattern, that's bullshit. That just doesn't make sense. If this was going to be a steep zigzag pattern, we've had multiple opportunities to turn around and head lower. We had one here, we had one here, we've had one here, and the last one was here, and it hasn't done it. So this has got to be an expansive structure now, in my opinion. A, B to new highs most likely, and then C. That's going to be a hope as a bear, but it's extremely unlikely. Okay, well, it's unlikely, very unlikely. You could go as far as $180,000 before you turn around in a B wave. So just bear that in mind. Okay, so now let's switch that off and look at something which I think is the most compelling feature. So here's the base channel in linear. I will look at it in log as well, because I had lots of people once we got to here, and they were like, oh, there you go, we're finding resistance, we're now going to come down. Then we broke through and came back, and they were like, oh no, we're going to break through resistance and come down, but we haven't, we've rocketed higher. Now, by all reason and all rationale and understanding of Elliott wave and channels and how wave 1s and 2s and 3s work, you're going to have a very hard time convincing me that this isn't a broken base channel. That this is 1, this is 2, and this is 3. Breaking the base channel and moving out. That's bullish. That's as bullish gets. Okay. Now, if we look at it in log and give the bears the benefit of the doubt, even then, it's broken. Right, let's take a corrective channel, cutting through those base lows and join the A here to the B to project the C. Even then, in log, it's broken. So to suggest that this is a zigzag is getting a little ridiculous. A little ridiculous. We are now at almost 261.8% the length of the A. That's a very, very unusual wave C. Alright, now they can be stronger, but they tend to still maintain a channel, or at least try to maintain a channel. How could that be? Well, let me show you. What if we were looking at it in log, we came off the low and we did something A, B, C, like that, right? It looks far more proportional than what we've ended up with, and it would have also in its verticality maintained some kind of channel. This fails to do so. Okay, this has all the behavior not of a corrective three-wave structure that's channeling as a retracement of the prior move down, which is what this move off of the low would have been. This has broken it and moved higher. This is all the hallmarks of a bullish move. So yes, there is still a bearish count. I will never try not to have a bearish count. I will always try to have one just in case. But the best I can come up with is that this is now a 90% retracement in either a regular flat or it's going to expand into an expanded flat. You know, that's the only hope I think you've got. But the primary bullish count is far stronger and far more likely. At no point in Bitcoin's history, after a sustained year-long bear market winter, have we moved to new highs as part of a corrective structure. It's always been a sharp structure, sharp structure, sharp structure. Let me show you what I mean. Corrective form. Sharp, sharp, sharp. Right, they're all sharps, and they're all of roughly the same length. This would suggest, if you're a bear, that we've actually done something which will end up on this scale and will be sideways. Not buying that. Not saying it's impossible, I'm just saying you're choosing less probable over more probable at that point. So the primary is bullish. Now that's enough chit chat about counts and stuff on this time frame. Let's come in and have a look at our indicators here. So things are getting pretty crazy. So on the weekly time frame, actually let's come out to the monthly time frame, because this goes back to that video I spoke about in December 22. Now when we go back to coming off of the low and the few months which happened afterwards, we were waiting for the big bearish momentum here to die off and for the crossover in for the crossover of the MACD on the monthly time frame to come to signal the end of the bear market. Now let me tell you how reliable this has been. So if we go all the way back, we can see quite clearly the first bull market up into 2013. We see the next bear market. We see the waxing of the bears and then the waning of the bears. We see the crossover of the average through the signal. We see the next big bullish phase. We see the crossover at the top. We see the 2017 peak all the way down into the January 2019 lows. The bears waxing. Then we see them waning. Then we see the crossover of the MACD. We see a small retracement back into positive territory of the next big bullish cycle into May 21. We see the crossover, and then we see the descent into the bear market. We come all the way down into the August lows, then into the December lows, and then with bears wane, we get the crossover of the average through the signal, and we transcend into the next bullish phase again. Every time this has happened, it has heralded the next bull market, and we got a signal that the bears were losing momentum 1, 2, 3 months in a row. I called it at 4 months in a row apparently. December 22, where I felt the bears were losing that fight. Now We've seen each subsequent low in the RSI has come lower. We've reached extreme lows this time, all the way down to 36.47 on the monthly. On the weekly, I signalled the low what I felt was the new low with this yellow box here, as we reached a new target, a new low of 19.35 on the MACD. Something we haven't hit on the RSI, sorry, something we haven't hit before. From extreme overbought to extreme oversold on the weekly. From extreme overbought to extreme oversold on the weekly. Extreme overbought to extreme oversold on the weekly. There were signs everywhere that we had bottomed. Right, now let's come down to the back to the monthly with these OBV profiles of these broken bearish trends. Once this bearish trend gets broken and we move higher after backtesting resistance, we are back into a new bull market. This confirms on the MACD, confirms on the RSI, and confirms on the OBV. This is a weaker form on this time frame, but it's still another piece of confluent evidence. Now the weekly time frame, we are going a bit nuts now. We've had two overbought readings and we've moved. There is now no longer any divergence between these highs. We're now just flat out stronger. Same with the MACD. We continue to push momentum higher with the average line now rocketing away from the signal. In the more extended bullish runs, we get an extended period of time over the overbought condition. Here, a long old time, October 10th to December 13. This bullish cycle, we've spent a lot of readings above the overbought condition. We have a couple here, and we have our first readings here. Now, the point being, we don't come back to oversold, multiple oversold conditions on the weekly time frame until we're in a bear market. Okay, and then we tend to spend most of our time pulling back to the average, to neutral territory rather than oversold. Neutral territory rather than oversold. Neutral, deeper here in COVID. Genuinely do think that was a one-off. You've got to give it a benefit of the doubt. So I think if we're now into the 3 over 3 over 3, that's likely what we're going to be witnessing. It's not an exact science, but it's a rough guide. Overbought conditions followed by returns to neutral. Overbought conditions followed by returns to neutral. Overbought over the coming 18 months and longer. This may be the cycle now for the next 10 years, or even longer than that. So we've had all the evidence. Things are looking strong overall. Now on the daily time frame, if the chart just adjusts. Oh, wait a second, what's going on? Right, so here on the daily time frame, we have got. Let's have a look at that RSI. Zoom in a bit. So the short-term bearish divergence which was forming on the daily time frame is now gone. We've swung to new highs. So that was between these highs here and any higher pricing. So at the moment, no bearish divergence to speak of on the daily time frame, on the MACD, on the RSI, or on the OBV. So if we are going to start topping out for a bigger pullback, there's no evidence of it yet, but it can come quickly. You know how volatile Bitcoin is. All right then. So now let's come into the smaller time frame now and have a look at this move off the low. We're going to come down to the 4-hour. This is how I've counted it, and this has been my count for a long time. We've adjusted bits as it's continued to grow, but the establishment of the bottom still counting it as -1 into -2. This is the biggest question. Is this -1 into -2, or is this intermediate 1 into 2? I still don't know. I'm praying that it's minor, because then we get one more big pullback, but the way things are progressing, I have my doubts. So this now means that we've got minute 1 into minute 2, and we're now into minute 3. Looking for minute 3 to play out, and then minor 3, and then -4, 5, and then intermediate 1. So let me just, before we get into all this gumph, let's just clear it off. And I put that in the wrong folder, doesn't matter, I can replicate that. And let's zoom out to the daytime frame to get it super simple, where we can see less detail. Right, so here's a little less detail. And these are not targets, I'm just moving them out of the way so I can see what the hell I'm doing. 1, 2 at minor degree. We're in 3 at minor degree. Big picture thinking for the moment, not worry obsessing over the smaller time frame. 3 will come. 4 and 5. Alright, this is the hope for the balls to get another opportunity. Intermediate 1 of this primary one. Big retracement into intermediate 2 and then off into 3. Now, if we see that, that's going to be the best opportunity we're going to get to load up again if you haven't already. But if it's not, then it's the count, then this will be intermediate 1, which is hence why I've got ball count 1, 2 and 3. Could be any of them. I haven't the primary on the long time frame is bullish, but a shorter time frame I'm not 100%. So what we're going to do is we're going to come into the smaller time frame and we're going to dress these up a little bit and see what we can tidy up. So on the intermediate 1, 2, still looking for that minor 1, 2. And we didn't get anything in my mind that convinces us. I was looking for a potential flat, never occurred. So let's delete all of this, because all of that's nonsense. So we're left with an extremely brief minor wave 2 here. Don't think that's a good fit. That needs redressing to count that as a flat. So I deleted what's wrong with it, but we haven't got time to fix it yet. So let's stick with this idea. Minor 1 into minor 2. This could be imagined as intermediate 1 into 2. Minor 1 into 2 or minute 1 into 2 as I've got it here. Now into minute 3. Looking for, on the smaller time frame, wave 1 at 2 at subminuet, 3, 4 subminuet, 5th subminuet. So we're looking for another 1, 2. Now this is exactly what we'd expect to happen at this wave degree. So in here, 1, 2, maybe this is 3, 4, maybe it's already done. This would be micro. And where's the number 5? There's the number 5. Looking for the 5 at subminuet, looking for the 1, looking for a pullback in the 2. A bigger pullback in the 2. Then pushing into the 3, 4 and 5 to find minute 3. So on and so forth. Alright, find minute 3, 4, 3, 5 into 3, into 4 at minor, into 5, and then now you're at intermediate 1. So you first get your first big pullback. If that's not the case and this is intermediate degree 1, then we are still looking for minor 1, which is going to replace what we're expecting up here as intermediate 1, a smaller pullback, and then you're into minor 3. Either way, you know, unless you get a bigger pullback, we're talking just stupid higher pricing at the end of the day. Bullish count 3, which was this one. This is working on the idea that we're going to get a flat, and we didn't get a flat. For 1, 2, 3 and 4. It was over 2 briefly. There's no way that was minor 3. So I'm going to have to stick with this. I'm going to make this my primary. I'm going to save it there. Been a lot of ideas to work on over the last few weeks while we waited to see if we'd break out of that top, but that's the one I'm sticking with now. So that's my primary. Minor 1 into minor 2. Minute 1 into 2. We're now into minute 3. Looking for minute 3 to complete. For minute 4, minute 5. Minor 3 to complete. Minor 4, minor 5. Intermediate 1. And then a big pullback. It will go to new all-time highs easily before that happens, if this count's correct. And then you'll get a big pullback. And then then it is moon all the way. And if you're not on board for that, after being given that second bite at the cherry, you deserve a slap on the wrist at least for being an idiot. Right, because you're your own worst enemy at that point. So let's keep our fingers crossed that that's what gives it that happens. It may not, but that's what we're hoping for. Now, trading within this minor degree pivot very tidily. Very tidily at the moment. 1 into 2, snagging around the median line for the next 1 into 2. Looking for 3 to 4 to come. Maybe back to the median line. Maybe not, given how brief they can be. Looking for the move up in the 5th. Looking for the 3. Looking for the 4. Looking for the 5. Okay, that's what we'd be looking for if we're looking for intermediate wave 1. But it just feels too bullish. I mean, we'll go much, much higher anyway, but what I mean is to hope that all of this is just another wave 1 again to get it to just feels too good to be true. Because it would be bloody perfect. It would be so perfect. You break new all-time highs, you drag in a bunch of idiots and liquidity up here, you slap them all on the face, come down here, buy their Bitcoin off of them, and then go to the moon. Yeah, that's a wet dream. We're not going to get that opportunity, I don't think, but we'll keep our fingers crossed. Alright then, guys, that is it. We are bullish. We are bullish all the way. We've been bullish all this time. We're going to continue to be bullish. If for whatever reason it collapses, we can read it, we can discuss the options. But a big pullback from here, if it comes, should be seen as a buying opportunity, as a larger degree completion in my mind, and will be the case for a while to come. So, thank you very much for joining me. I hope this video has been of some use to you. Like I said before, if you want access to a whole bunch of weekly updates on multiple markets, short form videos that are only 10 minutes long or so, plus the long multi-hour weekly live streams, plus the Discord, plus all of the educational and trading content, then the best way you can access all of that is to join the Patreon. Follow the link in the description box below. And take care of yourselves, guys, and I'll be back with you as soon as I can. All the best. Bye-bye.